It is 10:39 a.m. Pacific Standard Time. It is the 8th day of October 2025, and this is episode 1185 of Bitcoin. And dude, Square Bitcoin is coming out. It's coming from the guys over at Square. That would be Jack Dorsey's outfit. It looks like it's going to happen a little quicker than even I thought it was going to happen, but I'm just thinking about what it means to have the ability for anybody with the Square app. Any vendor that's using Square will have, I guess, a button that they can press, or it may not even matter. It may not even matter, but Bitcoin Magazine's got a write-up about the Square Bitcoin thing coming from Square. We'll get into that. We're also going to talk about Kazakhstan. This is yet another in a long line of idiotic countries that have decided to pull out a 6-shooter, put a single round in the chamber, spin the cylinder, and point it at their head to see if they survive. We'll talk about it. And then Russia is kind of doing the same thing, although it's rather embarrassing that it took him this long to find out that, well, we'll get to it. I promise. The Bank of England seems to be doing an about face on stablecoin caps. That's going to be in the news. And then what else we got on deck? Oh, Oh, yeah. The Japanese bond yields. Yes, we will talk about Japanese bond yields and the dollar a little bit, and Bitcoin. It's kind of all in one story there before we get into the market cap. Then the SEC, well, I guess they're going to formalize some innovation exemptions. I don't trust them, and honestly, neither should you. The 4-year cycle of Bitcoin, is it over? Is it really? But then again, has there ever really been a 4-year cycle on Bitcoin? Maybe the block will clear it up for us. And then strategy, they've got some numbers coming out. And honestly, it doesn't matter what you think of Michael Saylor. It doesn't matter what you think of Bitcoin treasury companies. It doesn't matter what you think of strategy itself or any of the other products that they've sold. They made a shit ton of money. And they don't really even have a product anymore. So kind of impressive. It's probably going to be infuriating for a bunch of people, but it is what it is. Europeans can now live on a Bitcoin standard, and the DDC raises $125 million to buy some Bitcoin. That will finish us out for the day. Back to the front. Bitcoin at your corner store? Square's new tool to make Bitcoin like everyday money. Micah Zimmerman from Bitcoin Magazine's got it. Square is rolling out a tool that could make Bitcoin usable in everyday business. From coffee shops to corner stores, Square is bringing Bitcoin to your local small businesses. Oh, yay! The company announced a new product suite called Square Bitcoin today, designed to let small businesses accept Bitcoin payments, hold it in a built-in wallet, or automatically convert part of their sales into Bitcoin, all within the same dashboard that they already use for point of sale and banking. If unfamiliar with Square, it's an all-in-one platform that helps small businesses accept payments, manage operations, and grow. The company offers a mix of hardware and software for point of sale systems, online sales, and business needs like, processing and payroll. The Square Bitcoin rollout includes 3 key features. Sellers can accept Bitcoin payments with no processing fees for the first year. They can automatically convert a portion of their credit card or debit card sales into Bitcoin, and they can have access to a fully integrated Bitcoin wallet where they can buy, sell, and hold the Bitcoin. Square says the goal is to simplify Bitcoin for everyday businesses and to make digital currency as seamless as credit card payments. Bitcoin payments will become available to United States sellers starting November the 10th, 2025. This November, not next November. Dude, this coming November, this shit is out. The move could mark a turning point for Bitcoin's use in real-world transactions. Until now, using Bitcoin for payments has largely remained niche, slowed by price volatility, complexity, and the lack of merchant-friendly tools. By integrating Bitcoin directly into Square's existing system, the company is lowering the barrier to entry for small businesses, and instead of needing to juggle wallets and third-party apps, merchants can now accept Bitcoin and manage it just like any other currency, deciding whether to keep it on their balance sheet or immediately convert it to dollars. Quote, "We're making Bitcoin payments as seamless as card payments," said Miles Suter, head of Bitcoin product at Block. Quote, "Through Square and Cash App, we serve both sides of the counter, which positions us to make Bitcoin everyday money, not just a store of value," end quote. For merchants, Square Bitcoin could mean lower cost and faster settlements compared to traditional card networks, which take fees and sometimes days to process payments. For Bitcoin, it represents another step toward mainstream integration, turning it from a speculative asset into a practical payment tool. If adoption takes hold, Square's ecosystem could help expand Bitcoin's role from an investment vehicle to a working currency within local economies. It also reinforces parent companies Block's broader bet that Bitcoin will become foundational to financial infrastructure, not just an alternative to it. All right, so that's the article. The most important part is that if you are a merchant and you use Square to take card payments and do all the rest of your, like, just think of the guy at the farmer's market. Farmers, if you want to see Square in use, go to a farmer's market. I mean, like, everybody uses Square. It's that little tab that's all like they put on the top of their phone, and that it's either got a chip reader on it and a card stripe on it or something like that. And if it's got like a square inside of another square, that's the Square app. And almost every vendor that I've seen in any farmer's market that I've been to has been using Square for like 5 years minimum. Almost all of them. There are very few exceptions, right? So they already use Square. Now here comes Square Bitcoin. Are they going to have to upgrade to Square Bitcoin? No, they're not. It's going to just be a feature added, right? They don't have to get a different app. They don't have to do anything. It's just going to be there. Think of if you have Cash App and you've had Cash App for a long time. I've got friends that have Cash App that have actually asked me how they can buy Bitcoin. And I'm like, what are you talking about? You have Cash App. And they're like, what? And I go, dude, Bitcoin's on Cash App. It's been there for like 2 years. And then they open up their app and they're like, I don't see it. And I'm like, look at the bottom. Do you see the B sign that kind of looks like a dollar sign? They're like, yeah. And I go, press it. And then they're like, holy crap, how long has this been on there? And I'm like, I don't know, like 2 years, if not longer than that. It's going to be like that. That's the most important part about this. Now, whether this shit works or not is a completely different story. It'll be up to us going if you go to farmers markets, then this is your in. If you ever wanted to talk to a farmers market merchant about whether or not they accept Bitcoin, this is your chance. Now, there's probably some particulars in here that weren't covered in this story. Like, for instance, if I have Square as a merchant and somebody comes and they pay me in Cash App and they pay me in Bitcoin, would I even know? Do I have to press any buttons on my Cash App thing and I would imagine that if Jack Dorsey is as smart as I think he is, that answer would be no. The merchant wouldn't have to do anything. In fact, the merchant might not even know, other than the fact that maybe they get a one-time notice saying, hey, this customer has paid you in Bitcoin. Press this button to convert it all into dollars, or press this other button to keep it as Bitcoin. Something like that. But regardless, if you've ever wanted to just get out of your shell a little bit and talk to a farmer's market merchant and tell them about Bitcoin and tell them that you want to pay them in Bitcoin, this is your chance to actually be able to do it. If we don't take that chance and Square doesn't get any adoption on this at all, we're risking it. We are risking it. But not like the guys over in Kazakhstan. No. In Kazakhstan, they shut down 130 different crypto platforms and seize $17 million in illicit activities. Helen Parks, Cointelegraph, tell us all about it. Kazakhstan, an emerging cryptocurrency hub in Central Asia, has been cracking down, baby, on illicit activity in the cryptocurrency sector, shutting down dozens and dozens of crypto platforms just this year. Kazakhstan's Financial Monitoring Agency, aka Goon Squad, has taken down 130 crypto platforms involved in money laundering schemes just this year alone, a spokesperson for the agency told Cointelegraph. The authorities have seized $16.7 million in various cryptocurrencies linked to these illegal operations, the AFM representative said. And last week, AFM also reported seizing another $642,000 from illegal mining operations going on in Kazakhstan, underscoring the country's strict stance on illicit crypto activities while continuing to promote crypto adoption. I don't know. Why don't you just let your citizens live their freaking lives? Is it that hard? Is it that outside of your realm of your supposed mantle of responsibility that you can just let people, I don't know, go about their business? Holy crap. All these people suck. I'm telling you, man. But as part of the efforts to curb illicit financial activity, Kazakhstan is reportedly introducing new requirements for money transfers. According to Deputy Chairman Kerat Bizlanan, all bank card top-ups with an amount exceeding $925 US will require mandatory verification of the sender's individual identification number. Because you're not a person. No. You're an entry on your country's balance sheet. That's how you know. Were you given a number at birth? Then you are not a citizen. You are cattle. I'm just saying, but quote, previously only the recipient's identification number was required. Additionally, the possibility to confirm the transaction via a mobile app or SMS is being considered because it's to have you as a ledger entry is just not enough. We've got to make you understand that you're a ledger entry. So you don't go get all uppity and try to do shit like live a life, get married, have kids, and have fun and smile in the sunlight. No, we can't have that. No, we can't. Anyway, addressing the shutdown of 130 crypto platforms this year, the AFM spokesperson emphasized that the platforms differ from conventional centralized crypto exchanges. These platforms function more like traditional currency exchange offices and are commonly referred to as crypto exchangers. The number of crypto exchangers shut down in Kazakhstan saw a notable increase in 2025, with the AFM reporting only 36 such platforms taken down last year. According to the Public Register of Digital Asset Service Providers, maintained by the Astana Financial Services Authority, 20 crypto platforms have been approved to operate in Kazakhstan as of the time of publication. Among the approved providers, the register includes major industry CEXs, including Bybit and Whitebit, which I've never heard of. Kazakhstan's efforts to combat illicit financial activity and cryptocurrency emerged amid the country's attempts to establish itself as a major hub for cryptocurrency in Central Asia, and you're doing a bang-up job at it. Wow. The country has pioneered the payment of regulatory fees and stablecoins such as Tether and launched one of Central Asia's first spot Bitcoin funds, as well as moving to establish a state-backed crypto reserve. But it remains unclear whether the seized $16.7 million will be allocated to Kazakhstan's potential crypto reserve, as the government's legal framework for the reserve is still being finalized. Stealing, theft, you're a ledger entry. I mean, this is Kazakhstan. This is a small stan in Central Asia. And it's like they've got the freaking Nazi playbook written down, working with IBM to make, tattoo all the Jews before they get gassed to death. This is not the way human beings were built to live, right? This is the way evil structures conjured up through demonic forces or whatever. That's what this feels like. And it's everywhere. It's everywhere. Russia just gets a black eye here. This one. Illegal mining in Russia. 2,700 machines have been seized in the city of St. Petersburg, according to Atlas21.com. According to RBC, Russian police have carried out one of the country's largest seizures of Bitcoin mining equipment in recent history, confiscating over 2,700 machines from a clandestine facility located in St. Petersburg. Ministry of Internal Affairs of the Russian Federation spokesperson Irina Volk stated that 3 St. Petersburg residents had signed a contract 7 years ago to connect a commercial property to the power grid. What appeared to be a legitimate business activity was in fact hiding one of the region's largest illegal mining operations. The facility operated undisturbed from March of 2018 until August of 2025, when the energy authorities began to suspect. They suspected irregularities in its power consumption. It only took you 7 years. Preliminary investigations revealed significant discrepancies between meter readings and actual consumption recorded on the grid. The operation was documented through videos shared on the Ministry of Internal Affairs official Telegram channel, which I did not know that they had. The footage shows officers forcing open sealed containers inside which thousands of active mining devices were found. The containers not only housed the machines, but also fully functional cooling and ventilation systems. Investigators uncovered multiple containers on site, as well as in adjacent buildings containing additional racks of hundreds of devices. Authorities believe the suspects used advanced technical knowledge of electrical systems to tamper with metering equipment. This manipulation allowed the meters to record minimal usage, enabling the operators to pay only a tiny fraction of the actual energy usage. During the seizure, law enforcement confiscated the entire set of mining equipment, along with 2 industrial transformers and all cooling systems. The 3 suspects were taken into custody on charges of property damage through deception or abuse of trust. The Ministry of Internal Affairs confirmed that investigations are ongoing to identify potential accomplices. Although details on the total number of stolen energy have not been disclosed, this case represents just one example of a growing phenomenon. In mid-September, Russian police dismantled a network of illegal mining centers in Moscow-controlled territories in the Donetsk People's Republic. Operators had connected 25 devices directly to the power grid, bypassing meters altogether and causing estimated damages of 14 million rubles, or about $170,000 in US dollars. Illegal mining is particularly widespread in the North Caucasus and southern Siberia regions, where electricity has historically been more accessible and less expensive. So a 7-year embarrassment right smack dab in the middle of St. Petersburg, and these guys can't figure out where their electricity is going. Holy crap, dude. Ugh. Just makes me kind of hungry. So I'll go on over to oshigood.us. That's oshigood.us. The Circle P is open for business. It's where I bring plebs just like you with goods and services to plebs just like you who want goods and services. And right now you can get some nice, brilliant HODL butter. What's in it? Oh, dude, you got to taste this stuff, man. Pecans, maple sugar, sea salt flakes, cinnamon, and black pepper. Dude, and that cinnamon and black pepper is just the barest amount, and it's just right enough to lift the whole symphony of flavors that comes from Hodl Butter from oshigood.us into the stratosphere. It's beauty in glass. You got to go get it. But make sure that when you go to oshigood.us that you use the code Bitcoin. And I believe I got a deal with Oshi that he'll give you 5% off, but don't quote me on it. I should know. Yes, I should know, but I don't know right now. I need to get a hold of Oshi and figure out if we've ever actually done that. Ask Oshi. I'm sure he'd be glad to hear from you. And he'd be sure glad to sell you some of his delicious hodl butter at oshigood.us. He takes Bitcoin. You can buy all of his goods for Bitcoin, because if he wasn't selling into Bitcoin, he wouldn't be in the Circle P. That's a stipulation, and it's never going to go away. If you want to be in the Circle P, you have to accept Bitcoin for your goods and services. Let's move on to the Bank of England, who has signaled flexibility on stablecoin caps amid industry pushback. Oh my God, we're pushing back, and the Bank of England is listening to us. Yeah, probably not. Cointelegraph, Sam Borgi writing. The Bank of England appears to be softening its stance on proposed limits to corporate stablecoin holdings, with plans to introduce exemptions for companies that may need to maintain larger reserves of fiat-pegged assets, according to a Bloomberg report. Citing people familiar with the discussions, Bloomberg reported that the Bank of England's reconsideration comes amid intense industry backlash and growing international competition, particularly from, you guessed it, the United States, which is moving towards clearer regulation through the Genius Act, signed into law in July. The BOE had initially proposed caps on stablecoin holdings, $27,000 US for individuals and 10 million pounds sterling for companies, citing concerns over systemic risks posed by widely used tokens such as USDT. The restrictions were intended to help the central bank maintain control over the money supply, protect consumers, bullshit, and prevent excessive reliance on privately issued digital currency. That's the ticket right there. That's why they're pissed. There's three things here: control over the money supply and reliance on privately issued digital currencies. This notion of protecting consumers is bullshit. They don't care, I guarantee it. But moving on, while those limits may be workable for traditional businesses, crypto-native companies may argue that such caps would constrain their operations. Given their need to hold substantial stablecoin reserves for trading and liquidity management, Bloomberg reported that the BOE may therefore consider granting exemptions to these firms. I wonder how much those will cost, because you got to pay to play, baby. As Cointelegraph reported, Simon Jennings of the UK Crypto Asset Business Council argued that the proposed stablecoin limits simply don't work in practice. They just don't work. BOE Governor Andrew Bailey had previously warned that privately issued stablecoins could threaten financial stability and undermine government's ability to conduct monetary policy, pausing to say, what makes you think that you have the right to do that? Sure. Is it written in your Constitution? Maybe. But this has only been, this government control of money is actually, is our, okay, as citizenry of the world, whatever government you're talking about, most citizens will answer the question, who needs to be in control of the money? They're going to say the government. Why? Because of recency bias. What is that? It means as of recent times, most citizens, actually all citizens alive today in the world, have been under a structure where there is no such thing as, quote, private money. It does not exist. However, if our lifespans were 500 years, 1,000 years, then you would know that it's only been for the last few hundred years that most, if not all, governments of all nations of the world have control of the money and monetary policy. It didn't used to be that way. Money used to be private. It used to actually, there was a market for money, right? And I'm not talking just about foreign exchange. I'm talking about inside each country. There could have been 2 or 3 different people competing for the utility of their money, or rather having money that had such utility that people would rather use monetary currency A over monetary currency B, but both were private. There was actual real competition between money back in the day. We have never seen that in our lifetimes, and our grandparents probably didn't either. I'm just saying that's what recency bias is. That's why I asked the question, what makes these jokers think that they have to do this? Apathy. We let them. We let them tell us what to do. I'm just saying, man, if you can will something into existence, and if your apathy wills into existence somebody providing you monetary policy and money, then by God, that's going to happen. And that's exactly what we've allowed to have happen. The BOE's evolving stance highlights the UK's ongoing effort to balance financial stability with competitiveness in the fast-growing stablecoin sector. And in this area, some critics say the country has been slow to act compared with peers like the US and the European Union. The global stablecoin market has surged to a valuation of roughly $314 billion, and the vast majority of tokens are pegged to the United States dollar. By contrast, pound-pegged stablecoins remain a tiny, itty-bitty, way a fraction of the market, less than $1 million US in total circulation, in fact, according to DeFi Llama, despite the UK's cautious approach and concerns over market risk. Tether co-founder Reeve Collins said it's only a matter of time before all fiat currencies exist in stablecoin format, possibly as soon as 2030. Quote, all currency will be stablecoin. So even fiat currency will be a stablecoin. It's just called dollars, euros, or yen, Collins said at the Token 2049 conference in Singapore. And I reported on that to you, I believe, last week or the week before. But in Collins' view, stablecoins are poised for widespread adoption thanks to their ease of use and their role in supporting the growth of tokenized assets, a sector increasingly attracting traditional financial capital. All that to say, the UK and the Bank of England is figuring out rather quickly that their days are frickin' numbered. But we have another fish to fry. Bitcoin is under pressure as the Japanese bond yield hits a 17-year high. Meanwhile, the yen depreciates. James Van Stratton writing with Omkar Godboll for CoinDesk. A lot can change in just a few days. Bitcoin recently reached a new all-time high of over in both US dollar and Japanese yen terms, boosted by new Japanese Prime Minister Takeshi Sine's bias for ultra-easy Abenomics policy setting. However, the very same Abenomics, I guess they're talking about the old Prime Minister Abe, so it's Abenomics. Okay, Abenomics. However, the very same Abenomics bias now seems to be working against BTC through its impact on the bond market. One of the key features of Abenomics is the implementation of an expansionary fiscal policy characterized by increased government spending to support economic growth. In other words, bond supply could increase, worsening the already dour fiscal outlook. The Japanese government bonds seem to be pricing that, pushing yields higher. In parentheses here, it says bond prices and yields always move in the opposite direction. Yeah, that's kind of true. According to Trading Economics, the 10-year JGB yield hit a high of 1.7% early Wednesday, the highest since July of 2008. The highest since July of 2008. It has risen by 13.31 basis points in 1 week to over 76 basis points in 12 months. The 30-year yield rose to 3.34% and then quickly fell back to 3.16%. Rising bond yields typically zap investor risk appetite as they increase the cost of borrowing, denting the appeal of riskier assets such as stocks and cryptocurrencies. Some analysts view Bitcoin as both a risk asset and a digital form of gold, although historically, data shows that the cryptocurrency tends to track tech stocks more closely. The upswing in JGB yield is even more concerning, considering its impact on the global bonds. According to Goldman Sachs, volatility in Japanese bonds could spill over into U.S. Treasury notes, adding to already present market jitters. Oh, we're all jittery. For every 10 basis point idiosyncratic JGB shock, investors can expect around 2 to 3 basis points of upward pressure on U.S., German, and UK yields, according to strategists at Goldman Sachs. The dollar index, here we come. Here's the dollar strength. The dollar index has climbed to a 2-month high, and the move is likely being led by the depreciation of the Japanese yen, which has dropped 3.5% against the dollar since Friday. The Japanese, or JPY's, decline is also linked to Abenomics, which calls for low interest rates at home. The probability of a Bank of Japan rate hike this month has dropped since Sine talked about Abenomics on Saturday. The dollar index comprises 6 major fiat currencies: the euro, the Japanese yen, the Great British pound, the Canadian dollar, and the Chinese currency, and SEK, S-E-K. I don't know what that means. Singaporean pound. South Korea. I'll bet it's the South Korean dollar. Anyway, the euro has the highest weight, followed by the yen. While BTC's rally is stalled, gold remains entirely unaffected, pushing through $4,000 an ounce as investors continue to seek safe haven exposure. Gold is also a risk asset, so I don't know exactly why they're ending off this way, but be that as it may. The Japanese yen the Japanese bond rising to its highest interest rate since 2008 is rather concerning, right? Not if you hold Bitcoin, but if you are just like if you have treasury exposure, dude, probably not a good deal. Let's run the numbers. CNBC futures and commodities, and breaking news from CNBC, y'all. Around 1/2 of Fed officials see another 2 interest rate cuts by the end of this year, 2025. That is in direct opposition to what's going on with the Japanese bond yields. All right, so how will those cuts, if we see them, if we see even one of these cuts, how is that going to play against what's going on with the Japanese bond yield going up? The market is actually making more of a decision than the Federal Reserve is making. The Federal Reserve only has one lever to pull. They used to have a lot of tools. They've really only got one, and it doesn't seem to be working. The lever will pull. They can change the interest rates by pulling the lever, but the transmission of the car doesn't seem to actually do the thing that the Fed wants it to do. It doesn't get into the gear that the Fed wants. And now that we've got the Japanese yields screaming, if the Fed lowers the rate of the U.S. Treasury bonds, well, is the market basically going to make a different decision? And my guess is, yes, it will make a different decision. But energy is mostly in the green today. Brent North Sea up 1.42% to 66.38. Oil is up West Texas Intermediate up 1.6 to 62.72. Natural gas is the natural hedge for everybody in the petroleum industry because, as generally speaking, 85% of the time, when crude prices go up, natural gas goes down. This is no different, 4.8% to the downside, leaving it at a paltry $3.33. Ooh, it's a magic number. $3.33 per 1,000 cubic feet. Gasoline is up 1%. And everybody's favorite light sweet crude, Murban crude, 1.68% to the upside to $67.80. Gold and all of its brethren are marching to victory. Palladium up 8.3%. Did you hear what I said? Palladium. All right. It's like one of the freaking Lanthanide series. There was a dance club in Lubbock called Palladium. It was freaking ridiculous, but hey, it was what it was. Palladium is up 8 1/3 points today. Gold is up 1.5, breaking through 4,000 to land at 4,666, the number of the beast. Platinum is up 2.8%. Silver is up 2.8% to $48.92 a troy ounce. Ag is mostly in the green today. Biggest winner looks to be coffee, 2 1/4 to the upside. Biggest loser is chocolate, 3.6 to the downside. Meanwhile, live cattle is up 1/2. Lean hogs crawling sideways, slightly in the red. Feeder cattle are up 1.33%. Holy shit. Cattle prices are just freaking on fire. S&P is up 0.5 point. NASDAQ is up almost a full point. Dow is up 0.16%, and the S&P Mini is up almost a full point as well. Bitcoin kind of lackadaisical, 123,780. So there's some recovery, but everybody keeps hoping for the $10,000 candle. I don't know. Maybe. That'd be cool. We can get 30.5 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,931,716.79 of. Average fees per block are low, 0.02 BTC taken in fees on a per block basis. There seem to be about 32 blocks carrying 38,000 unconfirmed transactions waiting to clear at high and low priority rates of 1 Satoshi per VByte. We are still in zettahash territory, ladies and gentlemen. 1.03 zettahashes per second is the security on the Bitcoin blockchain as we speak. Kind of impressive, honestly. We haven't been below zettahash in quite some time. From Token Singularity, yesterday's episode of Bitcoin, and I got Rev.Hodl says, "Thank you, sir. Chicago Bit Devs is Thursday. Nostr note attached with details," and I can't read those details here because I'm actually viewing this from inside fountain.fm, and it's not resolving the note that he dropped. I hope the guys at Fountain can fix that, because that would have been ballers. KT with 2,300 sats, thank you, sir. He says, or she says, I don't know. End of the episode, and I'm still laughing about the first article. What kind of idiot does it take to only invest a maximum of 4% to BTC and then listen to the suits that tell them to pull out the gains to keep from owning too much of the best performing asset in their portfolio? Yeah, the more I think about that, the more I'm like, rebalancing made sense and still makes sense for, I don't know, like a bunch of people. But the minute that you add Bitcoin to it, the fact that you would purposely sell some of your Bitcoin because the price is just too damn high so that you can buy more Tesla, it just seems ludicrous to me. But hey, you guys do you. Turkey with 500 says nothing. Yodel with 513 says yo. And then let's see, who else is here? Psyduck, ooh, welcome back, Psyduck with 100 sats says, P.S. I'm back. Psyduck with 749 comes back and says, Psyduck. Kind of missed saying that, honestly. Is there anybody else? Pies with 121, thank you, sir. No, thank you. Turkey with another 500 says nothing. And Permanerd, 210 sats says, wake up, people. The government is not better than you. But that was actually from Authoritarian Totality, which was a different show, but I'm always happy to see my friend Permanerd in the mix. That's the weather report. Welcome to part 2 of the news that you can use. Announcement. My favorite band, Rush, is going back out on tour, even though their drummer died 5 years ago. Now, Neil Peart passed away 5 years ago, and I really didn't think I'd ever see Rush even contemplate touring or writing new music or getting a new drummer. It just seemed ludicrous. Now, they stopped playing 10 years ago at the end of the R40 tour, but they found a drummer, and it's a woman. Dude, I started listening to her because I'm like going, man, Neil Peart was friends with Danny Carey, the drummer from Tool, and if you listen to Tool, you know how good of a drummer Danny Carey is, and even he couldn't cut the parts that Neil Peart had laid down. I heard Getty and Alex and Danny, try to play a couple of old Rush songs, and he's good, but he just couldn't cut it. So I start going, I don't know, man, this is going to be kind of dicey. So I start listening to this chick. It's like Annika Nilsson or something like that. Her first name's definitely Annika. My God, this chick, this is going to be interesting. They're doing a limited tour starting summer of 2026. If you're like me, if you're a Rush nerd and you did not know Rush was planning another tour, well, they are. Now, on to the rest of the news that you can use. SEC to formalize crypto innovation exemptions. And here's why that matters. Vince D'Aquino writing for Decrypt. The U.S. Securities and Exchange Commission is preparing to codify, let's call it an innovation exemption that could give crypto and fintech startups room to operate under formal regulatory supervision, according to remarks from Chairman Paul Atkins made on Tuesday. I'm sorry, I'm tripping over the under supervision. Give fintech startups room to operate under formal regulatory supervision. I was supervised when I was in kindergarten and, grade school, whatever. Chair Atkins recounted how the crypto industry has faced 4 years of at least of repression that had resulted in pushing things abroad rather than innovation being done at home. Atkins was referring to what Republicans and crypto advocates had previously labeled as regulation by enforcement under the previous Biden administration, specifically during the tenure of former SEC Chair Gary Gensler. The remarks were first reported by CoinDesk. A copy of the proceedings from the Futures and Derivatives Law Report event hosted by Katten München Rosenman, LLP, was requested and acknowledged, but had not been received at the time of writing. Expected before year end, the move marks the agency's most direct effort yet to replace ad hoc enforcement with a defined framework for experimental financial technology. It's kind of a frightening word, isn't it? Which includes new developments and applications for cryptocurrencies, blockchains, and other decentralized finance verticals. Earlier in June, Atkins had directed SEC staff to explore what he called a conditional exemptive relief framework or innovation exemption aimed at letting on-chain financial products or projects operate under temporary supervised conditions while broader rulemaking takes shape. It's like we're in an old folks home and we're having to be supervised and fed, applesauce like we were babies. Yes, because we can't be trusted. We're going to do things like set the house on fire and put the cat in the microwave. And oh my God, little Johnny, stop setting the tablecloth on fire. Late last month, Atkins confirmed that the agency was moving ahead with plans to formalize the plan, reiterating his earlier direction for staff to design a conditional relief framework. Atkins said at the time the proposal could be finalized by year end as part of a broader effort to create clear pathways for compliant innovation. Dude, pausing yet again, compliant innovation. Hey, your shit's innovative, but it's not compliant. You can't innovate that way. You got to innovate this other way. Compliant innovation is what I'm trying to describe here, is that it's an oxymoron. There's no such thing as compliant innovation. It's either an innovation or it is not. A thing is either compliant or it is not. There's no such thing as compliant innovation. This is all suit speak. I'm just saying it. This is throwing people a bone so they'll stop gnashing their teeth. I guarantee it. The exemptions would allow a slew of decentralized projects and platforms to, quote, test their ideas without burning millions on lawyers first, while giving regulators a front row seat to see how this stuff actually works, said Wendy Fu, CEO and founder of SUI-based DEX Momentum Finance. SUI-based? Are they trying to say Swiss-based? Anyway, SUI-based DEX Momentum Finance. Yet, the SEC's gesture only matters if the rules actually fit how crypto systems function, she added. Otherwise, it's just regulatory theater that sounds good but stays impossibly expensive to navigate. Yes, I'm in total agreement with her. She's actually right. Now, she's given them an out, but it will be regulatory theater that sounds good and is impossibly expensive to navigate. That's what's going on here. But moreover, again, they're throwing everybody a bone to get them to shut up. The SEC chair's remark reflects growing optimism among industry observers that the SEC is moving in earnest from enforcement to engagement on digital asset regulation. Given the alignment, the SEC's effort could finally bridge the gap between innovation and regulation in the U.S. market, said Jacob Kronbicher, CEO and co-founder of on-chain credit marketplace Clearpool. Crypto projects have faced uncertainty for years because there was no defined path to experiment under regulatory oversight, Kronbichler said, adding that a formalized exemption at this level shows that, quote, innovation can coexist with investor protection and is critical for long-term competitiveness, end quote. Despite the previous diaspora of crypto firms, the SEC is now trying to bring real innovation back on shore and encourage global collaboration around standards, he said. If implemented well, the exemptions could lower the barrier to responsible experimentation, he said, noting how many, quote, compliant-minded firms were driven to build outside the United States simply because the rules were unclear. A supervised framework for innovation would allow companies to test new models in areas such as DeFi, tokenization, or payments without the fear of retroactive enforcement, he said. So, a supervised framework of compliant innovation. Does this sound anything like what you thought was going to happen? Well, it kind of did to me. However, it was never framed this way. We always knew it was like, I don't know, man, the United States government embracing Bitcoin. How's that shit going to work? Well, this is how it's going to work, ladies and gentlemen. A supervised framework for compliant innovation. It sounds like a cloning lab to me, but hey, let's move on to the 4-year cycle. Is it dead? No, long live the king, baby. K33 claims Bitcoin's new era breaks every old rule. James Hunt, writing for The Block. Bitcoin. Its historic playbook is no longer relevant. Oh my God. According to research and brokerage firm K33's October outlook, which argues that the familiar 4-year halving cycle, once the market's metronome, has been rendered obsolete by the rise of institutional adoption, sovereign participation, and macro policy alignment. Bitcoin hit new all-time high this week. Yes, we know. We don't care. Quote, the 4-year cycle is dead. Long live the king. K33 head of research Vetle Lund wrote in the report, suggesting that this time is indeed different. And Bitcoin has entered a fundamentally new regime where structural forces, not retail mania, dictate its trajectory. However, Lund conceded the market looks overheated in the near term, noting that Bitcoin ETF and derivatives exposure surged by over 63,000 Bitcoin in one single week, the strongest accumulation of the entirety of 2025. Open interest on CME futures jumped by nearly 15,000 BTC, while United States ETFs absorbed over 31,600 Bitcoin in just 7 days. Historically, similar spikes have marked local tops and mean reversion plays. Still, the analyst expects only short-term consolidation, not a structural reversal. K33 positions 2025's rally as the antithesis of prior euphoric Bitcoin peaks. In 2017, optimism over CME futures launch fueled a blow-off top. Wait, what? Oh, the futures. Okay, sorry. That caught me by surprise. Yes, indeed. That wasn't the only deal, though. That was not the only thing going on in 2017, but we will let it go. In 2021, the dream of ETFs ended in Securities and Exchange Commission rejection. However, now in 2025, those dreams are indeed a reality, Lund said, and Bitcoin is now a material part of the global institutional market. BlackRock now manages $100 billion in Bitcoin ETF assets. Morgan Stanley is guiding clients toward a 4% crypto allocation. And Washington, D.C. has embraced a crypto-friendly agenda, including Trump's strategic Bitcoin reserves, which he has done jack shit with, I might add. Quote, during the 2021 climax, tighter monetary policy and expected post-COVID sobriety coincided with the peak. In 2026, Trump is expected to replace Jerome Powell with a rate-cutting marionette, putting out the fire from the expansionary big beautiful bill with gasoline, Lund said. Quote, abundance rather than restrictive austerity is on the books, a setup clearly favoring scarce assets, well, like Bitcoin. While historical fractal analysis suggests Bitcoin could be nearing a cyclical high, 1,051 days from the November 2022 bottom, roughly matching the approximate 1,060-day expansions of prior bull runs, Lund dismissed such symmetry as a coincidence. Quote, fractals are lazy, he said. Instead, K33 applies a 6-part framework of market risk factors, including assessment of funding rates, RSI, Bitcoin dominance decline, perps versus spot volumes, social trends, and supply dynamics. Only 2 indicators currently flash red. The perp spot divergence and an overbought RSI metric, by the way. And that keeps the market outside of the danger zone, typical of prior peaks, and means Bitcoin's price action remains healthy. Quote, nothing points towards another repeat of the dreaded 4-year cycle. Oh, really? Nothing? I mean, nothing? That's how we're going to end this article. Okay, nothing. Nothing could possibly go wrong. I'm knocking on wood. Dude, please stop jinxing everything that you see. Moving on to strategy. Here's the number. $3.9 billion. That's the gain just on Bitcoin in the third quarter of 2025. Duder. Alex Larry, Bitcoin News, please tell us more. Strategy Incorporated, the largest corporate holder of Bitcoin, reported a $3.9 billion fair value gain on its BTC holdings for the third quarter of 2025. The result shows the company's massive exposure to Bitcoin has paid off handsomely. The company's Bitcoin position, now over $80 billion, is the foundation of Strategy's business. As BTC rose above the $125,000 mark this week, Strategy's 640,031 BTC was worth $80.3 billion, or $31 billion in unrealized gains. Did you catch that? $31 billion in unrealized gains. Dude, he smoked most of the companies in the world, and he doesn't even sell a product. Well, unless you include Strike and Strife and all that, all the convertible notes and the seniorage bullshit, yeah, whatever. He doesn't sell software anymore. He doesn't make widgets. $31 $1 billion in gains. Am I suggesting to go rush right out and go buy MicroStrategy? No, I'm not. I'm just saying I can't argue with success. I just can't. It makes me look stupid. But according to the company's quarterly filing, Strategy's average cost basis for its Bitcoin is $73,983 per coin, built up over years of consistent buying. But for the first time since April, the company did not buy any Bitcoin this week. Executive Chairman Michael Saylor confirmed the pause and tweeted, "No new orange dots this week, just a $9 billion reminder of why we hodl," end quote. The tweet referenced the orange dots used to mark each Bitcoin purchase on Strategy's public chart. So there you go. $31 billion in unrealized gains since the accumulation of Bitcoin started for Strategy. Wow. Again, I can't argue with success. It would make me look dumb, right? I'd have to wait until something terrible happens to Strategy, which means something terrible would happen to Bitcoin, and I would not be happy about being right. Again, not saying to go buy Strategy stock. What I am saying, as always, is buy Bitcoin, hold Bitcoin, just don't hold it on exchanges. Just do it yourself. But Europeans apparently are now going to be able to live on a Bitcoin standard with something called Bringin. From Bitcoin Magazine, Vivek Sen writing, Bringin, bring in, Bringin, bring in, an Estonia-based Bitcoin financial services platform has announced the full release of its comprehensive Bitcoin to Euro solution following an 18-month beta testing period during which approximately 1,000 early users transacted over 6 million euro. The platform aims to bridge the gap between Bitcoin self-custody and everyday financial needs for users in the Eurozone. The launch addresses long-standing challenges faced by Bitcoin holders in Europe, particularly the difficulties in converting and spending Bitcoin for daily transactions. Bringin's solution combines self-custodial Lightning Network functionality with traditional financial services, offering users the ability to manage both Bitcoin and Euro transactions within a single application. Key features of the platform include direct on-ramping to self-custody, Bitcoin to Euro conversion through on-chain, which is another company, and Lightning Network. Oh, no. I'm sorry. Through on-chain transactions or Lightning Network, and personal virtual IBAN accounts for each user. Users can gain access to both virtual and physical Visa debit cards with zero transaction fees, enabling Bitcoin spending anywhere Visa is accepted. Holy shit. This is kind of big. The platform's integrated approach allows users to handle significant Bitcoin to Euro conversions exceeding one full Bitcoin. Damn, making it suitable for large purchases like a car or property. The service also simplifies compliance and banking relationships through its dedicated virtual IBAN system, addressing a common pain point for Bitcoin users who frequently face banking restrictions or compliance challenges. Bringin's solution is particularly noteworthy for its built-in Lightning Network wallet, eliminating the need for users to manage external wallets. This integration streamlines the Bitcoin experience for both experienced users as well as newcomers, providing a complete suite of Bitcoin-based financial services within a single application. The platform's automatic conversion feature enables users to maintain Bitcoin holdings while handling daily expenses through the Visa debit card system. This functionality allows users to effectively live the standard while maintaining practical asset to the traditional financial system. Quote, Lightning is the fastest payment network on earth, and we've built Bringin around it from day one, said Prashnath Chandesdanakar. Yeah, I butchered that one. Co-founder and CEO/CTO of Bringin. Quote, moving seamlessly from self-custody to your bank account makes living on better money possible. Money that can't be inflated away, money that you actually control, end quote. The launch represents a significant step toward making Bitcoin more practical for everyday use in Europe, combining the benefits of self-custody with the convenience of traditional banking services. The platform is available for download on both Android and iPhone devices, offering Eurozone residents a new way to integrate Bitcoin into their daily financial lives. I'm laughing I'll tell you why here in a sec. This development comes at a time when demand for seamless Bitcoin to fiat solutions continues to grow in Europe, particularly among users who prefer to self-custody their Bitcoin while maintaining easy access to the traditional financial system. And that's why I'm laughing. I'm not saying that this is crap. Okay. I don't know, but I've got questions as to just how far the European Union is going to allow this to occur, because this is very dangerous to the European Union. It just is. To allow the free use at this scale, using Lightning and on-chain, using Bitcoin, having Bitcoin to fiat conversions, having this whole IBAN connection, which is a whole European thing. I won't get into it, but I don't know. Just think of how you interact with your bank and your bank account, and when you're online, and the channels, communication channels that are spun up to be able to do all that. This flies in the face of everything that I hear out of everybody in the European Union. And plus, this thing is coming out of Estonia. Right now, I'm not saying anything bad about Estonia, but it's not exactly the most trusted country in the world when it comes to, everything that comes out of Estonia is like above board. It's not. And it's a small country. It doesn't have a whole lot of say in what goes on in the European Union, yet here we are with this clearly, if this article is to be believed, a highly utilitarian way to interact with Bitcoin on your own terms. I mean, are they really going to allow self-custody? Are they really going to allow self-custody wallets to exchange what's in that wallet for fiat using European banking rails? See, that I'm not so sure that first of all, we need to watch this, because this is a huge development, just like that Square Bitcoin thing at the very front of the show. But I don't know, man. I got my reservations about this. I don't think the European Union is going to be all happy that this is out in the wild on iOS and Android. So I suspect that there will be a takedown order issued by the European Union to both Apple and Android at some time to get this thing off of there. If they don't, then one of two things is occurring. Either they don't know about it, which is possible, but I don't think very likely, or somehow or another under the hood, it's actually working for the European Union. And I don't want to conjecture as to what that looks like. Last up, DDC Enterprise raises 124 million clams to accelerate Bitcoin treasury. Yes, I know. We won't stay here long. The consumer brand and e-commerce company announced today a $124 million equity financing round led by Pegasus Fund and Mulana Investment Management, with participation from OKG Financial Services. Founder and CEO Norma Chu already joined the round personally, investing $3 million of her own capital. How that's not a conflict of interest, I will never know, but moving on, the financing priced a $10 per Class A share, a 16% premium to the company's recent close, and it marks another step in DDC's transformation from here it is, retail operator into one of the most aggressive public Bitcoin accumulators in the world. Look, all this is, I'm just bringing you this to let you know that the Bitcoin Treasury Company train is still running. I'm not saying that's good, and I'm not saying that's bad. Well, actually, I am kind of saying that's bad. I kind of think that this whole Bitcoin Treasury Company is a little overhyped, and that's being conservative. It's a little overhyped, right? It's in my opinion, I would stay away from every single one of these companies. And when you do, somebody here in the audience will inevitably listen to me and stay away, and then they won't make the fat gains that they could have made had I just kept my mouth shut. And I take full responsibility for that. The only Bitcoin that I consider mine is Bitcoin that I personally hold under keys I generated that I keep myself. I have nobody else involved. It's not in an ETF. It's not a futures contract. No, I fully possess the Bitcoin and I sleep well at night. I do not want to add the sleep I already lose when dipshits in the market decide to cut and run. I don't want to add to that. What's Michael Saylor going to do? What is the CEO of Metaplanet going to do today? Is he going to wake up and just say, you know what? This was a bad idea. Let's sell it all. I don't want to worry about the UK selling their $61,000, 61,000 BTC that they stole. Just saying they stole it. I don't want to care about what they're doing. I already have to care about what they're doing, just like I had to do with Germany. Although Germany, selling all those coins, it was completely absorbed into the market, and I really didn't have anything to worry about. But 61,000 coin it's out there in the wind. I have enough on my plate. I don't need to worry about whether or not I get into shares of strategy or this DDA or what the hell, DDC. I don't care. I don't want it. I don't want to know anything about it. But again, I can't argue against success. It's clear that this train is still running. It is clear that this train is not derailed. It is clear that people still believe that this is a play to make. And as long as that sentiment is out there in the market, we would do well to at least understand it. At least know of its presence. Because if that train gets derailed, there's just trouble. There just is. I wish I could sugarcoat it for you, but I can't. In fact, I won't, because if I did, or I could, and then I did, I wouldn't be serving my audience very well, and I'm here to serve you. So what have we learned today, ladies and gentlemen? Square Bitcoin. That's the takeaway. That one and Bringin. Of all the things that we discussed today, those two things, Square Bitcoin and Bringin, I got question marks behind. Square Bitcoin, not so much question marks as far as whether or not it's going to get shut down. Will apathy come in? So there's some question marks about both of them, but I'm really excited about Square Bitcoin because it does give us the opportunity to go to the farmer's market, shake our rancher's hand, buy a steak from the rancher and say, I'm paying you in Bitcoin because you accept Square. And when he goes, what? It's like, yeah, Square, you now have the ability to accept Bitcoin. And even if you don't want my Bitcoin, it'll convert to dollars immediately. You won't even have to wait. But this way I can use my phone wallet to buy a Bitcoin and you can show him how it works. Because I guarantee you, if he knows he's going to get the money anyway, and he's going to be doing it through Square, which is something that he already uses, then he's going to want to know more about it. This is our opportunity to it doesn't even have to be a farmer's market. Any place that you go, like a trade show, or not a trade show, what about like a swap meet, a flea market. All these people use Square too. You have the opportunity to start having a real conversation without eyes rolling up in the back of their heads, without noises of yet another Bitcoiner coming up to talk to me about Bitcoin. And I don't know. But if I tell somebody, a vendor, like, yes, I'm going to buy this steak, and they pull out their Square app, and then I use my phone to pay that Square invoice, right? And I tell them at the moment that I make that transaction that I just used Bitcoin to buy this. They're going to go, what? They're going to be instantly interested. And that's the opening we need. We need buy-in on that word Bitcoin. And we need buy-in from the vendor on that word Bitcoin. This is the one time that I've seen that has the greatest potential of generating that vendor buy-in when we tell them, I just bought your steak for Bitcoin. I just bought your rutabaga for Bitcoin. Those salad greens, I just bought your salad greens for Bitcoin. They're going to want to know how, because they're using Square, you're using maybe Cash App or Square, doesn't matter. The fact that they can see that they got the money and you told them that you just paid them in Bitcoin, they're going to want to know more. Take the opportunity. Don't let it slip, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.